So my advice for people would first thing, you just said it, every market, whether it's good or it's bad, they always have opportunities, always have deals. Some of the richest families have made a lot of money in the worst recessions. So people that close their eyes and say there's nothing there anymore, well, they're missing out. So you have to believe that every market has opportunities. The second thing is be prepared, have your files prepared, be mentally prepared, and understand your niche market. Right now things are changing, cap rates are changing. Understand what you like to buy, understand where the cap rates are going, understand what the cost per units are, understand what the GIMs are. So know your market. Doesn't mean you're going to buy right now, but if you know and you follow, you'll be fast on the trigger when the deal comes up.
Hello, and welcome back to the Very Real Estate Effect podcast, a show dedicated to real estate investing right here in Quebec. And today I am very honored and pleased to have actually two financing rock stars from PMML. We're joined by Mr. Christian Pomerleau and Admir Bikic. Hi, guys.
Hello.
Hi, everyone.
Hi. So thanks for joining. The timing for your participation couldn't be better. We saw another interest rate hike from the Bank of Canada yesterday. There's a whole bunch of things happening on the financial markets, which is impacting the real estate market. And we're also going to talk a little bit about, what you guys are seeing as mortgage brokers. You work with a lot of clients, and the files maybe have started to shift a little bit. So I look forward to going into it with you guys. Before we do, I just want to remind everyone who's listening, thank you for supporting us. Please leave us a rating, a comment, and share this episode with a friend who could benefit from this conversation, as we can always learn something new out of every episode. So, all right, Admir and Christian, first of all, the Bank of Canada raised rates yesterday, 325 to 375. It was no surprise, right? The markets already knew this was coming.
Absolutely no surprise at all. What surprised a little, though, is that most economists in the last, let's say, 2 to 3 weeks have changed their estimations from 50 point increase to a 75%, not percent, but point increase. And actually, we got a surprise. The Bank of Canada brought out the baseball bat, but it was a small one that we thought. So maybe that. Like I was reading an article about Desjardins yesterday, and they said that maybe that's what the market needed to feel a bit safer. Personally, I don't believe that. I think we're still in momentum where things are going to change a lot. And in the last 3 days, we saw that the market had absorbed a lot of this increase potential, and now it in the last 2 or 3 days, the rates went down a lot, like for a multi-res in the CMHC part.
That's a rather good news. So the Bank of Canada keeps increasing the rates to try to dampen inflation. It's been really rising quickly over the COVID period. So much money was put into the system. The money supply greatly increased, and we didn't necessarily produce more goods. So the ratio between the two is called prices. And so naturally prices increased. So, the big question that everyone is wondering is, well, and no one has a crystal ball, but how long is this going to last? Because we were used to low rates for so many years. It was la la land.
Yeah, exactly. The challenge right now is that, like you just said, the pandemic forced the governments to inject a lot of money. They did different incentives, and that was to avoid it, like the economic collapse during that period of time. But now we come to realize, and some economists have projected that months ago, but we come to realize that they were a little too generous probably, and sustained for too long all these incentives. And instead of having incomes in the households, which should have gone down, they went up for a lot of people. So this created demand. People were spending, and then then it went out there with suppliers that needed to supply the products, and also added to that, we had some workforce, the lack of workforce, and that created an increase in the salaries, that increased spending again. So as we could see, the demand is like pushed, like it's like a self-fulfilling wheel.
Yeah.
And this is why banks right now, the Fed and our Bank of Canada try to react with solid hits. We're not out of the woods yet. I'm pretty sure that before the end of the year, we're probably going to have another 50 points increase. So we have to, the market is going to take this potential in the next weeks also. But now inflation will have to react. And the problem is that we always lag all these monetary policies. The impact, we're going to see it in 8, 10, 12 months, and maybe even more. And what most economists are thinking is like, how is the economy going to land like next year in 2023? Are we going to be in a deep recession? Is inflation still going to be out of control? So right now, the trust of the people and the confidence is something that is going to be very important to look at.
Yeah. And if I can add or summarize, really, the main goal of Bank of Canada right now is, in fact, to control or retake control of inflation. And the BOC's main lever to stabilize inflation is to increase the policy interest rates. So the quantitative tightening, as we say, is the number one way for the central banks to get a hold of inflation. And like Christian mentioned, this approach or this procedure is a delicate one, because the real effects of rate hikes on inflation is only felt about 12 to 18 months from the day it's officially announced. For example, 2 days ago, we had the announcement of a 50 basis points increase. We don't currently feel that impact on total inflation. Really, it's only going to be felt in about 18 to 12 months. So the BOC has to be careful right now to not overshooting the hikes, because overdoing, let's say, interest rate hikes can put our country in a severe recession. So the central bank has to do, let's say, a balancing act of controlling inflation without sending the country in a severe recession. But however, the Bank of Canada and central banks are very clear about this. If a recession is needed in order to stabilize inflation, they will continue with their increasing increasing of the policy rates. So this is where we're currently at. We see that inflation is theoretically going down right now. The general CPI is going down. So everyone was expecting a 75 basis points increase, but we believe that they are currently doing this balancing act that I was talking about. So they went with a 50-point increase instead of 75. It's going to be interesting what are they going to do for the next rate increase. But to summarize, this is pretty much what's going on in terms of inflation and the quantitative tightening right now.
Yeah, and as you said, it's a very difficult balancing act from the Bank of Canada to make sure that what they put in place now isn't too much, isn't too little, and then that they don't keep interest rates too high for too long, because that's really going to push the country in the wrong direction. Because it also has, obviously, from an economic standpoint, a lot of impact also on growth and GDP, on the unemployment, on the labor cost and wages, and for us here being interested in real estate and also in the price of construction. And I was wondering, like, what have you seen in the last 3 to 6 months when it comes to the price of construction? Because it's driven a lot, obviously, by materials and wages. And is it still as tight on the construction labor market?
Yeah, absolutely. So inflation and CPI takes into consideration the price of materials, labor costs, etc. And we do currently see for the price in the construction prices for multi-residential or just housing in general, it's it's at an, I want to say, like, let's say an all-time high, and it still currently is. So because of inflation, there is a significant rise in the price of materials and the price of even land when acquiring land to do the construction on. And on top of that, a large portion of the equation in construction is financing. And with the recent interest rate hikes, the amount of financing obtained for, let's say, bridge loans is being compressed. So taking all that into consideration, we've seen a decrease in new projects being built. So it's like, it's a, I like the expression, it's a double whammy. They currently have higher costs and they have lower financing. So we see a lot of projects being put on pause right now. And definitely the impact on lower construction projects, definitely we see it on the impact of increased rents, simply put as that, in the existing rental market or in the new rental market. As we all know, the past 2 years, rents have been increasing. And we believe that if not only just me and Christian, but the CMHC put a report out mentioning the fact that if this continues in this direction, the increase in rents this effect is going to last probably for the next 10 to 15, maybe even more, 20 years. So this is what we're currently seeing right now. If you do have, let's say, multi-residential or real estate right now, everyone knows the impact that of the situation. You put your unit on Facebook Marketplace, Kijiji, Lepac, whatever it is, you're going to see there's a lot of demand for your apartments.
No, definitely, it's putting a lot of pressure, and there's so much to unpack in what you just said. Like, we know that in Quebec, we're not building enough, given the immigration that we're allowing into the country and to the province, and also for current residents to be able to move and upgrade dwellings and so on. So it is putting a lot of pressure, and because of the interest rate hike, a lot of developers that I understand, and you must see this firsthand, have put their project on pause, which I can understand. But at the same time, why aren't those guys thinking like, too bad, let's do it, because my project is going to be even more valuable later? So I'd love for you to explain, like, why are some people stopping? Because on my side, I have a construction project. It's motivating me more to find a way to make it work.
Actually, you're right on that. It's funny because that's a discussion we had 2 days ago. And we know that some constructions are thinking their projects a little more. And it's not always that they don't want to go ahead. I mean, sometimes it's the banks which put a lot of bricks in the road. It gets very, very heavy right now just to get financing for the building. The underwriting extremely heavy. Even for us, the way we build the files, that the banks ask us so much. And the thing also that we have to know is that the very, very low interest rates that we had in the last years, like 2019 to 2021, whenever, like in construction, there were some mistakes or miscalculations, all those were kind of hidden and absorbed by the low rates. But right now, it's not the case. Like we've seen in the last months and last year, the construction costs rise a lot. Now it calmed down. We had a hard time to get the transportation and the l'approvisionnement of material. Now that is getting much better. Workforce was very difficult to get. Now that's getting better. So I think things are being put in place, like you just said, for good constructions which have like deep pockets. Just go and do their projects, because the thing is that, yes, the interest rates are high. It's going to be much more demanding on the borrowers, but they're going to be the only ones out there. Because the other ones, they're stalling their projects. So I think what's happening right now is a change in the quality of the borrowers at this period, at this time, where you cannot just go head on with a lot of creativity. Banks, they really want like hard money, So you have to put your 25% down if you go with a bridge loan, sometimes they ask like 30% now. For a bridge loan, they're going to finance 70 to 75%. Before, you could, use all different techniques to lower the and to lower the cash down. And even some were able to build without putting any money, but that's pretty much finished. You have to put hard money down, and things ain't going to work. But we're really saving the day now is the MLI program. This is really, it's important, and it made big changes. So I agree with you, Axel. If those people that could continue their projects, they just go there, they're going to be on such a big competitive edge, because the construction is very low.
And
especially in Montreal.
If I can add on that, really what a main point what Christian said is the preparation. That right now is extremely important. Like Christian said in the past, you can just go head on with your project, and you would figure it out on the course and on the way of constructing the building. But right now, it's very important to have everything planned from day one. Everything in terms of materials, labor, and the way that you're going to do your units. Are you going to incorporate a 1-bedroom, 2-bedroom? So everything has to be planned out, and especially the financing also has to be planned out. It's important to work in the collaboration with either a broker or a banker within the institution to sit down and properly assess what are the options in terms of financing to ease the down payment that you're going to put on your construction project. And it's important to understand what are the possibilities that are given to you. In the past, we used to work with I don't want to say a simple, but a simpler construction loan, a bridge loan, as we say. And right now, there is still this option. It is still a good one for certain projects. But if you want to put the least money down, certainly sit down with a broker or a banker to evaluate the MLI select from the CMHC and see which avenue should you consider in order to get the most possible financing for your project.
And from my point of view, this is music to my ears, because I'm working on my largest construction project, which isn't that big in real terms. It's a 16-unit in Saint-Jérôme, and I'm just about to be approved by the city. So I'm going to be going out for bids and then starting the financing. So everything you're saying, I'm taking good notes about.
I'd like to say something, Axel, which is very important for the people that are going to watch your show, is that in construction now, and if people go MLI Select or if they go CMHC, the CMHC are putting power on a clause that they already had before, but it's very important, because what they do now is that you will require for any type of project, whether it's small or big, to have an architect or an engineer which is going to attest of the quality of construction and that the norms and everything have been followed. And beforehand, it kind of existed, but the entrepreneur or the builder was able to sign off this attestation. Yeah. Now it's finished. CMHC really want an architect or engineer to sign. Now the challenge is that sometimes the architect does the plans, everything is perfect and everything is built perfectly, but no one followed with this type of credential. So it's important that the people know right now that if they are building, they have to make sure that their architect or an engineer is going to follow quality control, so that at the end they're really going to sign on this, because no signing, no CMHC.
Yeah. And two things, like I've heard of a case of someone who was exactly in that situation, and they did technically everything correctly, but because no one followed up, no one wanted to sign, and the guy was stuck and he didn't know what to do, because then the architect doesn't want to put his name on it. The contractor says, well, it's not my responsibility. And then the owner of the project is stuck in between. And you know what? It's more cumbersome for us developers and real estate investors, but in the long run, I think it's a very good thing, because it's only going to raise the quality of buildings and the type of dwellings that are offered. And so in a way, we should have maybe started that long ago.
Totally, like in Ontario, they're way more solid in those terms than what we have in Quebec. We have a lot of these institutions that are supposed to check things, but at the end of the day, it doesn't make a big difference. So yes, I believe it's a very good thing that they do this. But I know now that many builders are not aware. We have this conversation in and out with a lot of people, and a lot of even bankers, they don't know, and I'm so surprised, so that's important. I just wanted to jump it in so that your people are aware.
Yeah, definitely. And so it actually kind of, sorry, do you want to add something, Amir?
I was just wanted to add what you were saying, Axel, about the benefits of actually doing this, because as an investor, we usually look at, I mean, day one profits or on the 5-year time horizon profits. But in reality, if you're going to be owning this property for the next 25 years, 30 years, if you can have an architect or an engineer to attest the quality of your building, it's just going to give you a safer investment. So on the long run, I think people will benefit from this key investment that they're going to put in an engineer, because they're going to have a solid property for the next 30, 40 years.
Definitely. And it just puts better rental units out on the market. So
Absolutely.
it's good for everyone. So now, we've spoken a little bit about the economic environment and the changes. And so I'd love to hear about now, like, you guys are seeing a lot of volume at PMML. You guys are well, if not the biggest in Quebec in commercial financing. And so over the last couple of months, how has the market and the type of files evolved? Because everyone has to pivot. You said it takes more cash for down payment. Institutions are more stringent on terms. So, like, what are you seeing right now?
Okay, one thing I have to say is that conventional loans are becoming ghosts. We don't see much of those anymore. There's some banks, I have some bank directors which said they didn't do any conventional loan in the last 2 months. And the reason is pretty simple. The qualifying rates are so high. We're talking about like 6.95 is probably one of the lowest ones to 7.5. And as soon as you get into alternative banks, well, we're way in the 8.5%.
Wow.
And some banks altogether, like I know of two, they just stopped conventional loans altogether for probably 2 or 3 months right now. And what we see also is that the sellers, they lost their strong position. So right now, they're a little more anxious. Those that have to sell, they're a little more anxious to sell. So that's things that we see, but there's not tons and tons of transactions. We see refinancings that have to be done. And really, like we said, for construction, what saves the day is the MLI program. Probably like 80–90% of our files now are MLI select programs, and we kind of work pretty well. Not much creativity in the market. So if you're looking at what balance of sales are much harder to pass, we could do them, but much harder. And on the commercial aspect, I don't know if that could interest some people. I would say that semi-commercial are pretty good. Office, like the tour à bureau offices, is down pretty much. Retail, it really depends on the quality of the tenants. And industrial is still very good. The problem is there's not much inventory. If we'd had enough, it would be great, because that's the way to go. Yeah, it looks like that. The market, that's the type of files or the where we could send them, that it looks like that,
Yeah, so a lot of multi-residential right now, a lot of insured. Still see some commercial, a lot of industrial, but like Christian said, there aren't many industrial buildings right now, or there's a lack of industrial buildings right now. So, but in terms of commercial and offices, we have to look at it from a bank's point of view. With everything that went on in the past 2 years, everything shutting down, working from home, they look at it a bit from a different point of view. But we think eventually they will have more appetite for this as things settle in. We're already like settled in, but as things get back to the norm, and as people return to the offices, as leases in the commercial space, the they get renewed. I think banks will have, I mean, they already have a bit of appetite. They do have appetite, but I think they're going to have more appetite in the near future, definitely for those. Right now, CMHC and multi-residential, there's no problem positioning those files here.
Mm-hmm. And are you seeing a shift from your reoccurring investors moving away maybe from the much larger multi going into mid-size, or just shifting to commercial outright?
No, not really. No, I think what I've seen though is a cleanup of small investors. And when I say cleanup, not that it was bad, it's just that we see much less small investors which used to buy, optimize, and then go with CMHC. And the reason is because when you try to buy with optimizing, and you need a lot of money, because you buy something for $1 million, you have to bring like 600,000, 650,000 in the game, and just be finance for about 40% or 45% is kind of tough for a lot of people. So this is what I saw, that we don't have much anymore, but good partnerships that come in and they do have the money, and they know that that's the name of the game right now. You have to bring in more money, and if they could sustain it until the next refinancing, or if they could use MLI program right now, well, that's really what's happening. But no, we see a pretty big deals still. Construction is still not that bad,
Yeah. And over the next couple of months, as you said, a lot of smaller investors are going to be priced out of the market. They're going to stay on the sidelines. So there might be more opportunities for those who are well prepared or have access to more capital.
Absolutely.
Mm-hmm. Yeah. Okay. And then, so then obviously no crystal ball, but what kind of advice would you give to people who still want to do transactions into, small to medium multifamily over the next 6 to 8 months, for example?
Well, the way we work with clients is we want to make sure that even on our side we thoroughly understand their needs, and especially their goal for long-term growth. We try to work, us as commercial brokers, we try to work with people they don't do just one deal but want to do many. So, and we have a thorough understanding of the programs, the MLI program, and investigation of banks for their appetite and qualification changes, and we know where to negotiate with the different banks. And so my advice for people would first thing, you just said it, every market, whether it's good or it's bad, they always have opportunities, always have deals. Some of the richest families have made a lot of money in the worst recessions. So people that close their eyes and say there's nothing there anymore, well, they're missing out. So you have to believe that every market has opportunities. The second thing is be prepared. Have your files prepared, be mentally prepared, and understand your niche market. Right now things are changing. Cap rates are changing. Understand what you like to buy. Understand where the cap rates are going. Understand what the cost per units are. Understand what the GIMs are. So know your market. Doesn't mean you're going to buy right now, but if you know and you follow, you'll be fast on the trigger when the deal comes up. And then I would say to people, stay informed. If you need to a certain specialization, take the course, or call a good broker, and try to stay informed. And also we have very nice specialized channels like the PMML TV and L'Indice PMML, which has so many stats right now, and all the shows like you guys are doing. And my last advice would be get an excellent and competent commercial mortgage broker. I think honestly, it's needed more than ever. Files, I said before, they're heavy. The banks ask so many questions, like our clients cannot believe, and often when we talk to our clients, we have a couple of questions for them, but what they don't know is that we solved about the 20 other questions that the bank has dealt with us. So I think more than ever, you really need it for the good deals. Yeah.
And if I can add on top of that, it's important to, when you have conversation with our investors, to really ask these important questions. What are your objectives? What is your vision? What is your investor profile? What is your risk tolerance? What is your temporary horizon? Like, why are you buying real estate? I think it's still important to stay active in the market. Many people right now are on the sidelines. They're waiting for a significant drop in prices. I mean, we do understand that there is this economic principle right now with price stickiness still going on. But as we mentioned with lower construction sites, the demand is still there. We haven't talked about immigration, but supply is low, demand is high. I mean, there might be a small drop in prices over the course of the next, I don't know, 12 months. No one knows. But in reality, with everything taken into consideration, we believe that commercial real estate, if it's multi-residential or just commercial, it's going to steadily increase in value over the next 10 to 20 years. So it's important to look at today's numbers, but also to look at yourself, your objectives, and what you really want to do. Because if you do miss, I don't want to say miss the boat, or if you do miss out on the opportunity, just waiting that the prices drop significantly, you might wait a bit too long and might skip a great occasion. Because if you have a good deal right now, I think you're going to look back at it in 10 to 15 years when you're going to have a refinancing that is in that 5%, and you're going to refinance it at a lower rate, and it's going to increase in value because the rents went up. I think you're going to be glad with your acquisition that you did in 2022 or 2023. So.
Yeah. And it's so funny that you say that, Admir, because I recently went over on my computer over old files, and I was looking at some of the deals that I analyzed at the very beginning of the pandemic. And I was like, oh no, and I look at it now and I'm like, oh my God, if I had bought this, and I'm not the only ones to say that, like this is across the board. Now I look at those prices, I'm like, oh, this was a bargain, but c'est la vie.
Boy.
C'est la vie, but like I said, I mean, I think real estate it's not going anywhere. I mean, there is volatility. It's a cyclical market, but I mean, there's definitely upside coming.
Yeah, there is. And so for anyone who's interested in finding a very good commercial brokering team, how can they get in touch with you?
Actually, either by phone or by email. Do you want me to say it right now? Or
Sure.
Okay. Well, by email, you could reach me and my team on Christian.Pomerleau@PMML.ca, and directly by phone at 514-826-2052. We're a team. We're 7 right now in our team, and Admir is one of our brokers. And so whenever clients call us, we just work as a team, and we build for them.
Wonderful. All right. Well, thank you very much, both of you, for your participation today. It's greatly appreciated, and I know a lot of people listening will benefit from this conversation. Any advice we can get right now is well worthy. So, thank you again, and for everyone listening, thank you for tuning in till the end. And as it was said, keep doing research, keep getting educated, know your market, make some offers. Talk to you next week. Thank you.
Thank you, everyone.